Hi everyone, today let's take a look at the weekly chart pack. Do me a quick favor and like and subscribe and watch the video till the end to help out the channel, and let's get started. So the weekly chart pack seems to be a Finimize analysis article they publish every week, and I do like it actually. So first chart on their list is the Japanese 10-year. The 10-year has been rallying aggressively. The central bank has manipulated their currency for a long time, and now they're kind of letting markets do their own thing. And it's rallied up to 1%, which is concerning for the Japanese market. This is the first time it's done it in 11 years based on this source, which overall could be interesting. That could give the yen a little bit more strength, potentially push the dollar down. They also mentioned that stocks in Europe continue to be a little bit more appetizing than what we're seeing in the United States. Expectations for Europe continues to grow. It's actually in positive territory. You can see US dollars flowing into Europe as their economic index continues to potentially be positive. And they also mention here that the European Central Bank is likely to cut interest rates next week, which would be the first central bank to cut interest rates, so potentially giving them a shot in the arm there. And then they mentioned gold. Gold has been on a run. You can see it here. Gold versus the dollar is up 23%. Gold mining stocks have not really participated in all of that rally, but it could soon change, and maybe gold stocks are a potential play over the coming weeks as commodities continue to be strong. And then we have the MOVE index versus the VIX. We look at this almost every video, but you can see here the MOVE index is a little bit elevated, whereas the VIX is quite depressed down at 14. So the bond market is projecting a little bit more fear than we are seeing in equities right now, which is generally a concern as we go forward. Moving over to fear and greed, you can see we finished the week at a 48. A week ago we were at a 51, so we did pull back a little bit, pretty substantially actually. Peaks were around 62, 63 most recently. We bottomed around 44, and then we bounced a little bit. In terms of indicators, momentum still in greed, strength still in fear, breadth still in fear. Put call ratio did neutralize. That was in fear recently, and that's pulled back slightly back into neutral. And then volatility, again, pulling back from that SMA, so that's a little bit bullish. And then bonds, pretty mixed. Safe haven demand still in greed, junk bond demand still neutral. Moving over to the AAII survey, we got a pretty substantial step higher in the neutral category. Bears basically flat, bulls squeezing down to 39, neutral coming in pretty strong here. Makes sense. We did see some pretty sideways choppy price action. We did get a couple of bear candles on the daily charts, and then that big wick reversal on the Friday session. So we'll see how that factors into the next survey, but right now neutral, basically in line with historical averages, a little bit higher, and the bears are still a little bit lower. 31 is the average, and we're sitting at a 26. Moving over to seasonality here, you can see it is sideways choppy markets for the first half of June. Slight rally in the first week, dip low in the second week, ending up basically flat. And then you can see in that third week, slightly lower low, but then we end up rallying to basically flat on the month based on seasonality. So sideways choppy markets seems like a possibility for June, and keep this in the back of your mind. Historically, June is quite flat. Moving over to the June calendar, you can see sectors in play. They're highlighting oil as short, natural gas is short, computers and tech, utilities, infotech all long, banking short. Pretty interesting to see their thesis for the month. And then looking at the calendar, bullish, and then bearish, bearish. So mixed signals across the week. Generally start pretty strong at the beginning of the month, up 28 of the last 36. But as we get into that unemployment data, that could be quite bearish for the end of the week. Moving over to earnings Tuesday, you have CrowdStrike, always fun to watch. And then Wednesday, you got Lulu. They've been a dumpster fire here recently. It'll be interesting to see what they do on earnings. Dollar Tree, fun to watch as well. Brown-Forman, if you're a whiskey lover like I am, and that'll pretty much wrap it up for the week. Moving over to the economic calendar, here you can see for the Monday session, you have global U.S. manufacturing. That's expected to be basically flat there around 50.9. You also have U.S. manufacturing prices, ISM manufacturing PMI at 10 o'clock on Monday. Tuesday, we get the JOLTS job openings report. This is an employment week, so we'll see how that plays out. That comes at 10 o'clock. Wednesday is ADP non-farm employment change, global services PMI. Those are expected to be quite good in that 54 range, which is in line with the previous read as well. And then ISM non-manufacturing PMI, non-manufacturing prices at 10 o'clock. And then looking at Thursday, European Parliament elections, that could be interesting. Probably not, but always something to watch. And then Fed balance sheet at the end of the day, as well as initial jobless claims, which did come down a little bit on this last read, so nothing too crazy there. GDP for the Eurozone on Friday, and then this is the big one, obviously. Unemployment rate, non-farm payrolls, average hourly earnings, all coming out at 8:30 on Friday. And really, that should be the only thing that pushes around markets this week. Moving over to max pain for the Friday session, you can see not a lot of options. 462,000. Put call ratio a little bit high there, almost at 2. Put wall at 520 and 525. Call wall at 530. These aren't major levels. The only one there that even matters really to me is 520. So slightly bullish lean on max pain. It's currently sitting at 525, which is slightly below price. Top of the puts up around 530 if we get a bullish finish. So potentially 1% higher in my opinion. Moving over to max pain for the Qs, you can see max pain here at 452, stock price just barely below that, so slight bullish lean. Put wall at 450, call wall here at 460, and you can see a pretty decent dip in there. A finish between those two levels would make sense, so 454, potentially 455 right in that zone. Put call ratio basically flat. Total options about 150,000 less than the SPY, but again, really the same thesis, slightly bullish lean, not a whole lot, potentially 1% higher and a finish in this level. Moving over to the charts, looking at the SPX here on the monthly chart, you can see we finished up 4.8 on the month, which was just barely enough to make up all of the losses from the previous month. Just barely an all-time high there as well. You can see momentum just barely stepping back towards bullish. So lots of really marginal differences in my opinion, just barely higher, just barely holding on to bullish momentum. But look at that RSI. So RSI on that previous bullish month, which was March, that was at a 68.85. And then you can see RSI here at a higher high, 66.39. So we have clear divergence between that previous peak and the current peak. RSI showing weakness, price showing a little bit of strength. We're also just barely above that upper trend line there as well at 52.49, so basically 52.50. If we can hold these gains, we're probably pushing to that next upper trend line around 55.80. That's what I would be looking for. And you can see that's the trend that we had here back on that December of 21 high. Makes sense that we would touch that and then pull back from there. Then we'll see what happens. Could take a month or two to get there, could do it in 1 month. Could even hover there a couple times. You can see last time we hit it was November of 21. Touched it again in December, touched it again in January, and then we ultimately had that bigger breakdown with several months to follow. But we'll see how that plays out. Right now, it is bullish, and you do have to respect that, except for that clear divergence that we're seeing on the monthly chart. And then looking at the week, you can see the week ended up negative, even with that bullish push on the Friday session. Momentum stepping back to bearish. And this looks very concerning on the RSI. You can see clear breakdown, almost retested, and then we're breaking back down, so that's not good either. Again, clear divergence from this previous high at the end of March to current price. Current price is a little bit higher. RSI for March way higher at a 78.98. Current RSI reads 66.82, so clear divergence on this peak. We got that first hanging man candle. We'll see how that plays out. You would expect it to be bearish in my opinion. So clearly mixed signals between the monthly and the weekly charts, but that bearish step down, you would expect at least one more. It's not super common where you get one down like this, especially after a doji and then a down week, where you just get another flip back to bullish. It's certainly possible. That Friday session was powerful, but the weekly chart says bearish to me. And then you can see what that Friday candle looked like. Through a big wick all the way down below that 5200 area, and then ended up closing almost 1% higher on the day. Big volume, but momentum is still bearish, which is quite concerning. So definitely some mixed signals. Going to continue to watch this develop. And then moving over here to the SPY, you can see we're right at the level 527.35. We've been watching that one for a while. That's basically all these wick low levels that we had in this previous consolidation. If it was going to break down, this would be the zone to do it. Touch that level and then basically break from here. But the strong volume on the candle does give me a little bit of hesitation on that thesis. So again, mixed signals. If it breaks down 524.23 and then below that 520.80, if it can break higher, it would be looking at these previous highs around 531.47. Moving over to the Tasty charts here, you can see we took out those upper ATR resistances back in March. Now we're at that upper ATR band, which is sitting at 529.16. Touched it again here this month. Momentum still bullish, just like we saw on the other charts. Upper ATR resistance still in that same region. It is bending higher a little bit, but as we grind along that upper trend, it tends to slow down upward movement, just like we saw here in April of 21, just grinding slowly along that upper ATR. Anytime we overthrew it, we pulled back. Same as here, overthrew it, pulled back. So that tends to be a pretty strong level on the monthly charts, and that is where we're at right now. Upwards potential, not a ton. And then looking at the weekly chart, hit the 8 EMA, that was at 520.51, touched it on the Friday session, held that level, rallied up, upper ATR resistance 544.51. Just because that resistance is there on the other chart doesn't mean we can't push up to these levels and then pull back. You can see on the weekly chart, these levels can be a little bit less reliable, but eventually you do see those pullbacks into the middle of the range. And the middle of the range right now is sitting in that 505.90 area, so keep that in mind. Also, weekly momentum continues to be bearish. Got a slight step higher 2 weeks ago, and then this week was another continuation lower. And then looking at that daily chart, look at the volume that we saw on that Friday session. We hadn't really seen strong volume all the way back to April 19th, really, and then we got a big strong candle there on that push higher. So upper ATR on the daily chart 536.50, that would give you a little bit more upwards potential, and you can see ATR bands are really guiding up and to the right. So it is still a bullish trend. ATR support did get touched at 520.09, still bullish conditions here on the daily chart, except for that volume weighted MACD. It is slightly bearish right now, but I tend to see the volume weighted MACD be a little bit less reliable. But when they do have confluence, like you can see here, saw a dip low, saw a swing to bullish, just like we saw on the regular MACD, that tends to be a pretty strong confirmation. You can see that was a nice roll to the upside. And then you had the culmination candle there on 21 May. Moving over to the NASDAQ here on the monthly, you can see it's a little bit better. It was 6.28 on the month. Looking back to the end of March, we are up 1.4%. So over the last 2 months, since the end of first quarter, we're up 1.42%. Really just enough to get positive after that 4.46% down month in April. In terms of momentum, we're still seeing steps down, and we're at some pretty clear trend resistance around 18,700. We did wick a new all-time high. We have some upper trend resistance around 19,500 potentially. Again, looking at the RSI, you can see lower RSI read from this previous high despite the higher prices. And then you can see these previous RSIs back here in August of 21, where price was much lower than current price, but the RSI reads were way stronger. So you can see that here. Price all the way down in the 16,300s, ended up getting a move down. Now we have much higher prices, much weaker RSI. So eventually I do think this is going to roll down, but price action is still king. Right now the price action is bullish, and you can see it here on the weekly chart. Momentum swinging to bullish. RSI did break down this week, which is interesting. Retested, overthrew it, and broke down, which again is quite bearish. You can also see the trend on that SMA is down. That's not a great thing either. Hanging man candle fully engulfed the previous week, which is not great. It ended up down 1.44% on the week, even with that really strong reversal on the Friday session. So momentum kind of bullish, RSI kind of bearish, price action technically bullish, candle pattern technically bearish. So mixed signals for sure. We're at resistance, but the trend is still intact, which does fit with the overall thesis for June in my opinion, which is sideways choppy action. And then looking at the Qs here on the daily chart, you can see that Friday candle, big wick down to the 443 area, ended up finishing in the 450s. Still a big down candle Thursday, Friday. It still was negative. Didn't quite hit that 55 EMA down at 440, highly traded zone 439. But again, you have to respect the price action. It was pretty bullish going into the close. Could see some continuation, potentially a double top or a lower high setup. And then we get that bigger breakdown. But that can take a long time, just like we saw in this previous high. Got here 1 March, didn't really see a strong breakdown until 15 April, so a month and a half of sideways choppy price action before we got a bigger move down, and that could absolutely happen again. We're just now getting into 1 June, so if we did get another choppy price action like that, mid-July would be all the way over here, just sideways chopping through mid-July and then breaking down. I'm not saying that it's going to happen that way, but markets have done it before, and that is something that you have to factor in, especially with some of these big bear candles like the one we saw on 4 April. Saw another one like that on 8 March, and we managed to sideways chop through all of that price action before eventually breaking down. So something to keep in mind. Momentum bearish, RSI bearish. We're below the 9 EMA. Next support 446.60. Below that 443.90. Moving over to the Tasty charts, you can see that same thesis. Upper ATR sitting at 451.10. We've been grinding along that upper ATR for the last 4 months. Got there in February, again here in March. Pulled back from the level in April, pushed right back to it in May. Momentum did not switch to bullish here, so momentum continuing to fade on the Qs relative to the SPY, but bullish conditions on the ATRs, which on the Qs are sitting all the way down at 345. 5. I don't think we're going to see that in the near term, but we're at a zone of resistance. You can see last time we hit this upper ATR here in July of 2000, we grinded along that level all the way to November of 21. So many months at that upper ATR band before we eventually broke down. So could see that again. It's not impossible, something that you can factor in. And then looking at that weekly chart, again, up candle, down candle, just like we saw in the SPY. Momentum, not giving us a lot of information here. It is ticking towards bullish slightly, but it's not a really consistent move like we saw here in November, where you consistently step down, rotate into bullish. Then we got a little bit of a follow through. This is why I was saying the volume weighted MACD can be a little bit less reliable. You have momentum swinging to bearish here, while price is continuing higher. Eventually you did get a breakdown. We did see it on that 15 April week, but we've continued to have bearish conditions as price was rallying. So just something to factor in there. And then upper ATR resistance, 478.23. I don't necessarily think we're going to get that high, at least within this week. It's not impossible to get there. ATR support down at 412. And then looking at that daily chart, you can see we did wick ATR support, 444.36. You can see I bought in on that dip low, managed to make a little bit of money on that Friday session, but we are below the 8 EMA, which is not great. We're above the 21, so we're in that area. Again, volume coming through on that wick rejection. So if we did see a continuation higher, upper ATR is at 462. It's not impossible to get there. That is something to factor in, but momentum still bearish here. So mixed signals pretty much across the board on the SPY and the NASDAQ. Moving over to the Russell here on the monthly chart, it was positive on the month, 5% higher. Momentum bullish, RSI still bullish, slowly grinding higher. Couldn't make up for all the losses on April, which was a pretty big down month, 6.85, but then a pretty strong push here, 5% higher. I would expect more bullishness to come. The trend is still intact. We're above all the EMAs and SMAs, but there is a little bit of trend resistance there at 207.30, which is where we rejected on this monthly candle. And then switching to the weekly chart, you can see it was an inside candle on that previous down candle, 1.27 to the downside, momentum not telling us much. RSI here breaking back below the SMA, slowly trending down, which is not great. You could also argue for a high, lower high setup here, potentially breaking down back to the trend around 200. That would be interesting. So again, mixed signals. Monthly chart looks good, weekly chart looks less good. And then looking at that daily chart, big push on the Friday, 0.84 to the upside, momentum swinging to bullish. You do have to factor this in. So you got a pretty good continuation here for a step towards bullish. Typically that means you're going to see at least a little bit more bullishness on the daily chart. So you have the monthly and the daily chart showing some bullishness to come. Just that weekly chart is a little bit concerning. Moving over to the Russell here on the monthly chart, you can see it is technically bearish conditions. ATR resistance at 223.27 as price continues to push towards that level. Momentum is bullish. Didn't see a ton of volume this week. All of the volume came through on this previous push, and then we saw a big candle down. Rallied here this week, but no volume to support it, which is a little bit concerning. And then flipping over to that weekly chart, you have bullish conditions. ATR stop at 183.65. It's holding above all the EMAs and SMAs, but again, lower high setup, finding resistance at that first upper ATR band. That's at 208.63. Rejected from that level. We'll see what happens next. And then you can also see the ATRs on the weekly chart starting to flatten out, which is not a great indicator either. And then moving over to the daily chart, bullish conditions here, 201.51, looking to push to that next upper ATR, which is 208.02. And then look at these ATR trajectories, definitely more up and to the right than we saw on the previous chart. Momentum, not super bullish. You would like to see a step down like we saw on the regular charts. Back above all the EMAs and SMAs, want to see this push, potentially even to that second upper ATR band. That would be 210.73, which would be above this previous high, and then you could get that continuation in structure on the IWM. And then finishing up here with the Dow for the major indices, you can see we did get a big down week 2 weeks ago, 2.33%. Then we got another down week, 0.8. Wicked these previous levels. Again, this looks like a bit of a topping pattern. Hanging man candle, momentum still bearish on the weekly chart. Zooming out a little bit, the concern for me here is you can see we're in this zone of volume right now. If this zone here breaks, then we're definitely pushing down to this next low, which is the high from July of 23. You can see the volume on that profile here. I would expect it to push through that zone quite quickly, which could lead to a pretty significant down move. And then look at this RSI, breakdown, retest, breakdown. Typically that second move move is going to give you a lower low. We'll see how it plays out. Does not look great right now. So Dow looking significantly more bearish than some of the other charts that we saw. But then you have to balance it out here with the daily chart. So that candle 1.59% to the upside on that Friday session. Momentum swinging to bullish. Big volume on those two candles. You could argue maybe an island reversal. Gap down, very slight gap up. Big rally. So based on the daily chart, you would expect a little bit more sideways choppy price action, waiting for these EMAs and SMAs to consolidate back towards that 388 area. So weekly chart looks more bearish. Daily chart looks like more consolidation in my opinion. Moving over to the equal weighted S&Ps, you can see on that April candle, we did go down 4.82. And on this candle here for May, we were up 2.48. So we did not make up all of the gains. So tech continuing to outperform. Based on the equal weights, underperforming a little bit. However, momentum is still bullish here. RSI looks okay. And then looking at that weekly chart, again, the week was not that bearish, just a little bit. Bounced off that 21 EMA just like we did here. It was a lower high, which is not great. So if that broke through, that was going to be very bearish. I would argue this is still bearish conditions. Momentum's bearish, RSI is bearish, but the structure is still technically bullish as we hang out just above all the EMAs and SMAs. And then getting into that daily chart, you can see we broke 164.87 on that candle. Based on that move, you would expect to move to 167.53. That would be right at these previous highs, and then this would be a higher low setup. So you would have a high, lower high, and then a low, higher low, so you'd be in this choppy sideways action. But momentum here showing that this could follow through to the bull side. That had a good amount of push to it. Interesting to see that daily chart on the equal weights didn't have the same volume as we saw on the other major indices. But overall, this still looks good. Filled that gap back above all the EMAs and SMAs, which says a little bit of bullish in my opinion. Moving over to the Tasty charts, I really wanted to highlight the difference that we're seeing in the MACDs here. You can see no volume in this previous run up, so it's probably going to fail. And then look at this momentum indicator, much more bearish on the volume weighted MACD than the regular MACD. And this is the weekly chart, so it already looked a little bit bearish, but I wanted to point out that difference there. And then you can see on the daily chart, choppy price action, bearish conditions, back to bullish, back to bearish. So sideways choppy market, but technically right now it is in bearish conditions. Moving over to ratios, you can see Russell did outperform the SPY a little bit. This 2.59 level continues to be resistance. Haven't gotten above it, so you do have to respect that. And then you can see NASDAQ underperformance, just like we talked about in the Friday video. The SPY ended up positive on that Friday session, whereas the NASDAQ was still negative. So SPY outperformance seems to be the trend. Russell and NASDAQ underperforming a little bit. But really, we've been in this range for a long time, and that doesn't seem to be changing right now. Moving over to SPY divided by the M2 money supply. This is one of my favorite charts, so definitely something to watch. And look at this channel. It's very, very clean. We're right at that upper trend here. Continue to bounce off of that level. Tried to get above it the previous week. Tried to touch it again this week, and then we got a bearish candle. Down about 0.5% on this chart. Still sitting very extended. Don't forget, this was the previous all-time high at 22.05. That is a very important level. Pre-COVID high, all-time high, previous all-time high, and then you can see the high here in July broke down from there, and then we pushed right through it on this most recent run-up. Typically, you don't stay above that 22 level for very long. The only other time that we've been above it was the dot-com bubble, so critical zone, definitely extended to the upside in my opinion. But the other thing I wanted to highlight here is look at this RSI, massive breakdown, retesting. Usually you get at least one more down move there. You can see a very similar setup, breakdown, retest here, got at least one more push down. You could argue maybe two pushes down. SMA also trending down. We've seen this many times. You can see it here. Sideways consolidation, broke down, retest, continuation lower, tried to overthrow it, continuation lower. As long as that SMA is trending down, typically you see rejections off of that. So right now it is trending lower, so definitely something to be concerned about. Eventually I do see this breaking down, and I think this is a critical week. We'll see how it plays. And then looking at that daily chart, similar thesis on the RSI, big breakdown, could see a little bit more pullback closer to that SMA before we break down. Maybe one more test of this trend line, a lower high setup here, but momentum is bearish. There wasn't a ton of bearish momentum, so something to consider. Usually the run up after the move down is a little bit more aggressive depending on how bearish the move is. So this is a big bearish move. You can see the MACD got all the way to a minus 0.14 there. Right now we're only sitting at a minus 0.03, so not a very big move down. Usually the run up after that is not very big, and I would expect it to fail. Moving over to stocks that moved this week, we got Dick's Sporting Goods and Gap. So we have U.S. retail companies making some huge gains here. Dick's was up 19.83%, and then you got Gap up 38% this week. So massive moves for these companies. Dick's is at all-time highs at 227.60, and it's been on a run. It's more than doubled since the lows here in October at 102. So Dick's on a massive run, no overhead resistance. I don't really follow these stocks. That's why there's no real structure on these charts, but they are massive movers here and they've been on a run. Then I wanted to highlight Gap here. This is not all-time highs for Gap, but it does seem like it's headed to this most recent high, which would be around $35. If it did, that would be a really strong move. To that recent high would be about another 25% or so. And based on this price action, you have to assume that that is the next key level that we would be headed to. You can see we touched that same level in January of 2018, touched it again here in May of 21, and it seems like that's where we're headed on Gap over the next week. So strong movers, US retail seems to be in play, and they are moving up strongly. Moving over to the Mag 7 on the weekly chart, it was down 0.01, so basically flat, unchanged on the week. Momentum is bullish here, but again, look at this RSI, downtrending, just barely above it. You would expect this to break down based on what I'm seeing here, and that was a pretty sharp move on that 8 April week. Big move down, retesting. Again, I would expect that to move lower. Clear divergence. RSI was much higher on this previous peak. Now we have higher price action, weaker strength. Momentum says it's still strong, but we are right at these upper trend lines. I would expect some form of a breakdown. And looking at it on the daily chart, you can see it looks very similar to that NVDA chart. But big move down on Thursday, still negative on Friday. Testing those trends, hanging man candle, 21 EMA sitting there at 368.40. If this area breaks here at 381, that's what I would expect to see right at my level at 367.10. And then looking at momentum, stepping down, RSI looking even weaker here on the daily chart. It is worth noting the trend here on the SMA is still bullish, so you could see another bounce from there. Volume on that Friday candle was decent. Again, it came in at the end of the session more in line with the major indices, but on a candle pattern, this is not super great. Moving over to Apple and Tesla, you can see Apple was up 1.19 on the week, continuing to grind on this trend line. That's 3 weeks in a row grinding there. Momentum is bullish, RSI is bullish. So Apple still looks like it's in decent shape. Overall, this is still a sideways choppy market, pretty wide ranging to be honest. It's been on a decent run, 16% up, and on its most recent fall, you can see it was almost 17% down, coming off of that 144 EMA. So sideways choppy market. Apple's not really in favor, but it's not going to crater. They still do a lot of stock buybacks, and they do have a lot of cash, which is beneficial in this high interest rate environment. So Apple still in good shape, and then Tesla here, sideways choppy markets, down 0.65, basically unchanged. Momentum slightly bullish, but RSI is weak. You can see it's below the 50 line by a lot, but it is above the SMA, so sideways choppy market makes sense. That is what we're seeing. We did have that big down week on the 15th, and then the up week to follow it up on the 22nd. So I do think that there is a bottom in place. I don't necessarily think that it's going lower, but we haven't had a change of trend and it hasn't really broken out to the upside yet. So based on the technicals, it is sideways choppy with no clear direction. Moving over to Microsoft and NVIDIA, Microsoft was down quite a lot, 3.49. This looks quite awful. Look at that RSI. Breakdown, retest, breakdown, does not look good at all. And that is coming off of a double top, which is not great. So clear divergence, lower RSI with the same price action at that 429.88 level. Waiting for these EMAs to consolidate, and they are very close. If we get a gap through that level, we're probably headed to 394. And then if that breaks, I really don't have anything until 378.77. So momentum bearish. Doesn't look good at all on Microsoft, biggest company in the world, showing some bearish technicals. And then NVIDIA, it's been holding up markets. It was still positive on the week, 2.97, gapped up, dojied, big wick rejection from that high. If it gaps down to open the week, that would be quite bearish. Island reversal, could see a move back down to the trend line down in the 980s. I don't necessarily think that that's going to happen, but it is something to consider. Everything still looks bullish here technically, but an island reversal at all-time highs could be a bearish indicator. Moving over to Meta and Amazon. Meta was down 2.38, and then Amazon 2.38 also, so same exact down percentage. Pretty interesting there. Momentum on both, bearish. RSI on both does not look good at all. Typically, after 3 straight down bearish candles, you do tend to see a little bit of a bounce. But on a purely technical basis, this is quite bearish. Structurally, we're still above the 21, but below VWAP, below the 9 EMA. Momentum is bearish. Touch the level 174.23. You can see same thing here on Meta, touching 454.07. If those levels break down, there's a lot of room here to the downside. Could go to these previous lows at 426 or 404. Get that lower low. You have a clear high, lower high setup potentially there on Meta. And then Amazon just looks terrible with a double top. Looks bearish, waiting for a clear break below that 21 EMA. Moving over to staples and discretionaries, getting into sectors here. Staples turned to profit, 0.31. Momentum still fading, RSI kind of mixed there. Still below my level, 77.50. If it can get back above that, 79.90 is my next level. But right now, that is your resistance. If it holds that as resistance, then you're looking for 75.40 as your price target. So critical point here, right at a zone, waiting to see what happens. Technically, it is a little bit bullish. And then looking at that daily chart, you can see that Friday candle was super positive. So you would expect some follow through on that. Again, momentum swinging to the bull side, continuing to talk about that as an opportunity here. And then discretionaries also turning a profit, 0.24 to the upside, held that 174.76 level. Still a sideways choppy market with a high, lower high, and a low, higher low. So waiting to see what happens. Current price target would be 180.10 because we held support. So looking for a move to there, but we are below all of these EMAs and SMAs on the short time frames. 9, 21, VWAP, all right there. 55 sitting down at 170.50, which is that next area of potential support. So mixed signals on discretionaries, but based on what we're seeing on retail, maybe discretionaries has a little bit more life in it. Something to consider there. Moving over to transports and oil and gas. Transports has been falling for a while, from 70.50 all the way down to 64.18 for the close of this week, but it got all the way down to 62.18, caught a wick and bounced like everything else. Momentum still bearish here, but that's a pretty strong wick rejection. You can see one here, caught a bullish week after that. This is still a short-term downtrend on the weekly chart, 9, VWAP 21, so you would expect rejection if it did catch a bounce, but you do have to respect those wicks. Looking at this on the daily chart, you can see very strong last day of the week, positive 1.63. Next price target 64.89. Momentum swinging to bullish. It seems like transports has caught a little bit of a bid here, and it's been a strong downtrend, so there's plenty of room for this to potentially push higher. Overthrow these shorter term EMAs, potentially look for that 55 at 66.94, which would be right in line here with my 66.63 level. I do think transports is going to have a little bit of life, and that should give markets a little bit of strength in my opinion. And then oil and gas, I traded this one a little bit this week, got chopped up on it. Momentum is still bearish here, which is concerning, but the week overall was pretty positive, 2.41%, finished at 52, and I really want to show this here on the daily chart. Sideways choppy action, the low of the week was down around 147.77, and then look at that Friday candle, held in there on Thursday, gapped higher and rallied on Friday, back above the 921 in VWAP on the daily chart. Still got the 55 sitting up there at 153, so there is some overhead resistance right there, and then you have a level 154.13, which is basically the high from May 10th, but if we can get to that level, hold that, and then potentially push, maybe 161.50 is in the cards. Oil is definitely under a little bit of pressure right here, but this has been a decent down move. We topped out around 162, pushed all the way down to 147. Now we're rallying back to 154 in my opinion. Moving over to oil and copper, you can see oil was negative on the week, so that's what I was saying. Oil is not great. It could find some support here at the 200. It did last time. That was right here in December of 23. Touched the 200. That was around $70 a barrel. Pushed back up to 87, and now we're here again. 75.80 is the trend. Needs to hold that level. If it does, maybe we can push higher. That would be a higher low setup. Right now, momentum is bearish, so that's a little bit concerning, but that is the level. If it breaks that, 73 would be my next one, and then this consolidation low around $70. Again, if this could bounce, that would support oil and gas stocks, which I think is also an opportunity right now, like I mentioned. And then you have copper, overthrew its all-time high, going back to March of 22. These are copper futures. You can see we got into this zone in February of 2011. Same zone here again in 2020. Overthrew it on this most recent run-up, and then we've had 2 weeks in a row of bearish candles. Momentum is starting to fade on copper, RSI breaking down, which is interesting. Copper is a little bit of a bellwether for the economy, and potentially this was just extended. It's pulling back to a little bit more of a normalized condition, and then we're going to get a continuation higher. But as long as copper stays strong, we should see the economy continuing to expand. Let's go ahead and extend that trend line out. Maybe we overthrow it down to that trend line around 4.47, but just understand that copper has been on a run, got a little extended, pulling back. zone of support here, and if it goes higher, that should take markets with it. Moving over to breadth, we did get the continuation that we thought we were going to. We had a massive bearish week on 20 May for both of these. Got the big move down, got down to 24.30 on the 20-day and then 36.70 here on the 50-day. And then we immediately bounced, caught a really strong candle on that Friday move. So there is some strength in here. Doesn't mean we can't get another continuation lower. It's certainly possible, but there is some buying pressure in there at those levels. So something to keep in mind. Definitely some buyers. You can see it here, similar move, big down candle, got the continuation, wicked lows, and then we got a bit of a bounce off of that. Wouldn't shock me if we got a similar move here on the 20-day. And then looking at the 50, a little bit less common to get a big bearish candle with no follow through on bearish candles on the 50-day breadth, but that wick to support does seem like we could see a little bit more bullishness next week in my opinion. And then looking at 200-day breadth here, you can see sideways choppy action. Wick to these lows once again, 64.70 has been that support. Touched it here on 15 January, touched it again 12 February, touched it again here 15 April, and then once again this week continues to bounce off of that level, and we'll see if we get another bounce here. Last time we did was that 15 April candle, and that was followed by 4 weeks of bullishness. Not necessarily saying we're going to see that again, but it's not impossible we see some bullishness off of another wick low. Moving over to the dollar here on the weekly chart, bearish candle. I still think this is a little bit bullish. So you have a low, higher low, potentially here. If it bounces from here, pushes to 505, it can hold that level and then push to 106.83. That would be possible. Trend line sitting right there. Momentum, not really showing that move quite yet. You're really just looking at this trend support. Again, it's not impossible. We haven't really seen any confirmation of that. If we see bullishness on the dollar, that's typically weaker for equities. But if it breaks through that level, then you could see a push down to these previous lows around 102.7. And if we do see a move like that, that should be quite bullish for equities. Moving over to yields, really these continue to do not much of anything. Bearish week here, bullish week the previous. 10-year a little bit bullish on the week, wicked that next level at 455, couldn't hold above it. So sideways markets. Obviously the unemployment data this week is going to push yields around a little bit. If unemployment is weak, probably see yields sell off, as that'll encourage the Fed to cut sooner. But if unemployment and the jobs market continues to stay quite strong, then we could see yields start to push a little bit higher, potentially back to that 5 level. And if that happens, that'll probably be bearish for equities in my opinion. Moving over to bonds, similar to yields, they're not really doing much of anything. Wick to low, back into the middle of the range here for J&K. Momentum slightly swinging to bullish. RSI not showing much of anything. It's right on top of the SMA, but it's technically above the 50 line, so no clear direction there. And then looking at TLT, continues to be in this wedge on the weekly chart. Low here, high, showing lower highs each time, but we did catch a bounce off of this trend line, establishing this lower trend. And then we touched it again this week, caught a bit of a bounce. We'll see how that plays. Extend that trend line out a little bit. That's the trend line from this previous move lower here. We're back in contact with that trend line. So wedge, waiting for some clear direction. Again, looking for that unemployment data. If the unemployment data is weak, we should see this kind of break to the upside, in my opinion, and vice versa. If it comes in strong, TLT will probably sell off at least to these previous lows around 87, if not lower, down to that 86 area. Moving over to the VIX, you can see it was slightly positive, starting to throw some wicks up to that 14.7 area. Momentum's bullish here, so that's concerning. Starting to swing to bullish, first candle we've seen on that in a while. It's been stepping down consistently. Slight bullish move. RSI, it's not showing a breakout yet, but that's concerning. Usually you get at least one more follow through candle to the upside once you see a step towards bullish, just like we saw here. Step to bearish, bullish candle, 2 more weeks of follow through there. And then similarly here, starting to swing back to bullish, we saw rising VIX, which we did see some decent steps down there. So VIX looking a little bit bullish going into next week, which does give you an overall bearish thesis for major markets. So something to keep in mind. There's a lot of mixed signals across the charts, but volatility looking to come in a little bit more next week. Moving over to my accounts, I did pretty well. I was slightly positive on the week. The NASDAQ was down about 1.5%. So that's usually my metric. I try to beat the NASDAQ overall, which I did do. And I would have done a lot better if I had traded better in my IRA. I'd really traded terribly this week in my IRA. On my main account, did quite well. Made up for all of the losses in my IRA, but still pretty disappointing there. In terms of positions, short put on the IWM, really I just need to have a longer term thesis on the IWM or in my IRA account. I'm trying to trade the accounts the same way, but you just can't do it the same. The rules are different between the two accounts. which is a little bit frustrating. In my main account, I continue to trade quite well, outperforming, keeping my individual account basically at all-time highs, even with the NASDAQ going lower. But in my Roth account, just really struggled in that account this week, and I need to reconsider that strategy. Overall, slightly bullish thesis going into the Monday session based on the move that we saw on that Friday candle. Let me know down in the comments section what you think of the markets. Are gold miner stocks an opportunity? And what do you think about Japan? Are they going to let their yields go above 1% and stay there for the first time in 11 years? And how is that going to affect the US dollar as well as the global economy? They are the third largest in the world, and there will definitely be effects. Otherwise, like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.